All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I want to show you something here, and this is a 1 or a 5 minute chart of the IWM or of small caps since Sunday night. Right up here, Sunday night, where they opened up Monday morning, and 158.5. And right now they're at 154.5, right? So about a 2.5% drop. Okay, not that big a deal, but 2.5% here. So far this week. But compare this to the SPY, which, yes, it's dropped. But here on Monday when it opened, 281.5, and right now 278, right? 1.5% drop. We are seeing small caps lag here over the last 3 days, and lag to a way where it could potentially change some of the metrics up here today, and that is something that we just have not seen in the market throughout the entirety of the rally that's been, and we haven't even seen it throughout the flat period over the last several weeks. We are starting to see it now. We are starting to see it this week where small caps are lagging the general market and underperforming to a certain degree. Now, when does the underperformance really start to get bearish, or where you look and you say, wow, okay, the bears, they've really got something here? Well, let me show you. And you've seen me pull this up before, but we're just going to pull up the SPY versus the IWM over the last 30 days, okay? And you can see up here in the performance that over the last 30 days, the SPY's up 2% and the IWM's up 2.5%. What's that mean? Well, that's pretty neutral. They're about equal performance. It's a very neutral reading, right? It's gone from a very bullish reading to now a neutral reading because of what's happened over the last little bit. Over a 30-day period, they're pretty equal. But if we come down and we take this into a 2-week or a 14-day period, what starts to happen? Well, over the last 2 weeks, small caps are underperforming large caps. Now, by 0.4%, all right, not all that much, right? Yeah, not all that much, but we are seeing them lag for the first time. If we go to the last week, you can see small caps almost 2% lag of the SPY. So while the SPY, over the last week, it's gone down 0.5%, yawn, snooze, IWM down over 2%. We're starting to see an erosion here. An erosion with, those small cap names, lagging and underperforming. If you take a look at transports, you can see about the same thing. Here's transports relative to the SPY. Over the last 7 days, they're lagging by about 2%. Over the last month, right? Over the last month, IYT is lagging the SPY by about what, a percent? This is the first time we've really seen this shift since, here in 2019. This is the first time that this type of shift has really come into play, and this is an erosion of the market metrics, the market fundamentals, and we are seeing that come into play, and we're seeing it here today, right? We're seeing it, just even in the short run here today. We're not seeing things like the bullish percent index breakdown yet. It's still holding on just fine. If we look at the number of stocks trading above the 20-day moving average, okay, we have, 60% of the S&P trading above its 20-day moving average. That's a very healthy number. There's nothing bearish in that number. The number trading above the 7-day moving average, well, this is a little different. This is about 34%. Okay, if this number starts to erode even a little bit more here today, I think that's a pretty interesting danger sign. But the bulls no longer have control of this. They've had control of this number all year. They no longer have control of it. So we're seeing a little bit of transformation here. We're seeing a little bit of erosion, for the bulls. We're seeing the bears, be able to grab a little bit, but again, it's just a little bit. It's just a little bit, here overall. Now today, interesting on S&P futures, we had what is what is typical in a bear market. Right? If you've never traded a bear market, a big bad bear market, you see this a lot. Where, okay, futures are indicated to do something, and then, like this morning, flat, and then you get a rally. And there's no news, there's no reason. Yeah, this rally, okay, trade data, which, the market never moves on trade data. Who cares? Big, this move, this rally up, this push higher, come into play on pretty much nothing. And then, boom, open and just sell it off, right? Just open and sell it off. And, I don't have any data to suggest this is manipulation or any reason to suggest this is manipulation other than to say it happens way too often for it not to be manipulation. And we see this happen a lot in bear markets. In bull markets, to some extent, we see an early sell and then rally, but that's after the market opens. In bear markets, you tend to see this happen in the pre-market, and then, the move happen in the market, kind of like what we've seen today. Now, one day of this type of price action doesn't a bear market make, but, interesting to see that here overall. The other thing today, you'll notice there's no bottoming volume here on S&P futures, right? When we saw the drop yesterday, okay, in fact, let me come to it here, all right, maybe not. Let's see here. Here we go. We saw the drop yesterday. There was no bottoming volume, right? There was no bottoming volume in play. But on recent drops, we have seen the bottoming volume come in. And it's say, hey, you know what? Market's not going to push on down anymore. Today, no bottoming volume. To say, hey, the market can't push and break its lows today, we just can't say it. There just is not that type of, volume action, at least so far. It could still come in, but we're now getting into the European close and whatnot. So, chances are slim that we will see any sort of major bottom volume, come into this market, here today. So, that's kind of what we're seeing market-wise, here in the markets this morning. You look at the banks, they're outperforming. I mean, banks are green here this morning. You look at materials, and they're green here this morning, right? Materials broke below the 7-day moving average kind of earlier than some of the other sectors, but breaking back above the 7-day moving average here right now. Right, so this isn't an entire market. Hey, go short anything in your gold and type of a move. This is kind of the market. A little bit of continued erosion coming in, and finding more of a consolidation range overall. But that's what we're seeing at least so far here. Now this morning for the challenge, I sold my Halliburton. Halliburton was down about 3% when I sold it. It's down about 3% right now. This is not a move where I want to be out of Halliburton. This is similar to what I did last week when it made the early move down, took it, looked for another reentry point. To get into a little bit of a different option, and that's all I'm looking for here, right? Ideally, it'll rally 30 to 40 cents off this level, get up into that kind of 29.80, 29.90 area, but we'll see. And I'll look to get back into it here later today. I didn't get a chance to add to my position, which was my original plan, wanting to add to it. Didn't get a chance to do it this morning. It just moved too fast. The stock opened up, and it was down like 10 cents right on the open, and then you can see the move here, the speed of the move. This is a 1-minute chart. It was just a pretty speedy move. Then about a 4-minute rest, and then boom, drop, And, that's Halliburton. That's, it's typical for Halliburton. It's not uncommon for it to do that. But didn't leave me. And I mentioned it yesterday. The risk of me not adding more yesterday is that, hey, it might, it might not let me in. So, anyway, I'm in all cash for the challenge and, looking to put that cash into work. I'm not looking at this as, the market's broken and down the market's going to go so I can buy anything and be able to take advantage of it, even though I still have a strong bearish bias when it comes to the market, which hasn't changed here over the last several weeks. Okay, I'm looking at FedEx for an entry here as well. And I chuckled at my brother this morning because he texted me. He goes, "Man, your cat and your FedEx, they really look like they want to drop." And I'm getting the exact text here because this is very typical of him to send me. He says patterns like cat and FedEx seem in trouble. Just hard to say when is the ideal timing. So my response back to him was, "Well, tell me when they're going to break down." And I think it's it's one of those where, yes, the daily charts, there's some trouble here. We're seeing the stochastics, move below 50 here. MACD's turned negative. We're seeing some erosion in these things. FedEx tried to break up, on Monday, wasn't able to hold, and so you would expect a downside move to come in, and I would like to play it. When it comes to the options, I kind of have a little bit of FedEx scenario or Caterpillar scenario from yesterday that we talked about, where the options aren't exactly the greatest, and it's not because of implied volatility. It's not because of anything weird in the spreads or anything the market makers are doing. It's just the timing, right? If I buy the monthly March, they're good value. There's nothing there's nothing alarming here. It's very normal, but I only have 9 days. If I come in and want to do a weekly that gives me kind of a little bit more of my normal time frame, now my spreads are significantly greater, and my delta isn't as good. And when it comes to FedEx, I bet you anything I'm going to start to bump up into earnings. I'm not exactly sure when the earnings date is, but I suspect it's coming soon. This is an off-cycle earner. Yeah, March 19th. So, if I come into the 22nd of March, you can see earnings are priced in. So, pretty much my only option to get into is right here. Do I want a little shorter term type of play? If I do, I've got to be right on the timing right now, right? It can't be, it can't be that nebulous timing, type of thing here. So anyway, that's that's coming into play, but really like it to the downside. Really like Caterpillar as well. In terms of just the way they're set up and the way that they are trading, and just some of this rollover potential, and maybe more importantly, the risk reward potential here. Today's high on Caterpillar, today's open price. That's the stop point. If you want to short that and play it on lower, and it sets up quite well here. So anyway, those are some of the things I'm looking at. We're seeing some things like Visa start to break below the 7-day moving average. In fact, there are quite a few stocks starting to break below the 7-day moving average here today. We're going to start seeing a lot of stocks, with this 3-7 crossover, and I don't know if this is the right scan, so bear with me a second. Let's just take a quick look. This doesn't look, this is 3-7 to the upside. Let me come down here, switch this, just 3-7 crossovers to the downside, and let's see what that looks like here. Yeah, you can see 55 S&P 500 companies, over 10% of the S&P has a 3-7 downside crossover. Schlumberger, ConocoPhillips, Devon Energy, a lot in the energy space. Ford, NVIDIA, Boeing actually seeing a 3-7 crossover on Boeing. That's that's pretty amazing. Considering the run that this stock has been on, and finally having a 3-7 crossover for the first time, downside 3-7 crossover for the first time since December. I mean, these stocks have gone a long time without this kind of downside crossover. And we're seeing a lot of them come into the market here today, from Under Armour to Pioneer, Molson Coors, Whirlpool. I mean, yeah, we're seeing a lot of these here in the S&P 500 here today, and I would not be surprised if we see a few more. I priced out some CSX puts earlier today. CSX got a downgrade here today, and now this has been one of the best performing companies this year, and has been on an absolute tear. And the downgrade was really interesting. The downgrade was basically saying, hey, the next year, it can't be as good as the past year. The past year, everything's gone right for the company, which I totally disagree with. But, that was their logic. Say, hey, you know what? Everything's gone right. It's not going to all go right this next year. So, they put it to a neutral rating. To me, it sounded like an analyst who has had a buy rating on it way too long. And, it hasn't gone anywhere, and they need to pull it. That's what it sounded like. And, we saw it gap down. It's holding on to 72 here. But you can see the 3-7 downside crossover starting to come in. If this pulls back or just retraces a little bit, there's a lot of, appreciation value, in the options should it do that. So those are a few of the things, that I'm watching, kind of go along there with Halliburton. I priced out some T-Mobile here this morning. I didn't pull the trigger on it, but T-Mobile does look destined to kind of come back into this 69 area, maybe even 68 area here. The one of the posts that I put up yesterday talking about Goldman Sachs, talking about some of the areas of the market that were crowded. This is one of the stocks they mentioned where the long trade is just really crowded. And where fund managers, this is the type of stock that's just been punching into and having to get into and having to chase. And they made this kind of argument that, these types of stocks, once the selling starts, they're going to roll. They're going to roll downhill really quickly. They also had Google in that argument. You can see Google holding up very well here today, holding up extremely well here today. And a good example of a stock just not breaking on down. Amazon breaking down a little bit here today. Facebook was in the green, still in the green here. So, again, this isn't mass breakdown across the market. There's some subtle erosions in a few areas. And that's about it. So bottom line, trust your signals, your risk reward, run with your individual trades. And, you know what, market bias and all of that, great, fine. But, it's not like I can go out and I'm going to go and enter some Halliburton puts again and go, well, I'm bearish on the market. The market's going to go down, so my Halliburton puts are going to work. It's not going to have anything to do with the market. It's not going to have anything to do with the S&P. Yes, if the S&P moves 3%, it's going to take it. It's going to have an effect there. But overall, in terms of, the real directionality of the stock, the S&P isn't going to have much to do with it. And, other stocks, you can't quite say that as much. A FedEx, the S&P is going to have a little bit more to do with it. Caterpillar, the S&P is going to have a little bit more to do with it. But, again, it's not one where, you go out and you say, well, let me go short because I'm bearish on the market, or let me go buy something because I'm bullish on the market. You play that individual stock, and it's still a differential market out there with stocks moving to the upside and to the downside overall. Okay. All right, so I'm not jumping in anything right here. I will, I'll hold off here just a little bit, kind of see how things play out here this afternoon. I've told you some of the things that I'm looking at. I do have a few others that I find to be very curious, but we are seeing fund managers kind of starting to watch some of their big performers start to come on down. How soon are they going to want to lock in some of those gains and pull on out? Obviously we will see, but anyway, those are some of the things that I'm looking at as we go forward here today. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.